Hi, welcome. Dave and Nathan here with another Greenleaf investing tip. Today, we are talking about our industrial assets and what we're really looking for when we go to purchase one of these types of deals. So Nathan finds pretty much every deal that we have in this kind of segment here. So you want to tell us a little bit about industrial and kind of what we're looking for when we get out there?
Sure. Good to be here today. Talk about our industrial sector. You know, it's probably been our highest velocity asset we've been buying these days, and high level, I think it mirrors some of our other strategies. We're looking for in-town, well-located properties that you can't necessarily go next street and build it from scratch. Does it make sense monetarily? And then we want to stick below that institutional level. So typically for industrial, less than 100,000 square feet. So we're not out there competing, with these giant funds or the Blackstones or Goldman Sachs of the world. And then, we're looking for an opportunity to capture kind of this COVID boost that rents have seen in the industrial sector, where ever since 2020, rents have grown double digits per year, and we're just trying to come in there and go along for the ride. And
the idea of getting in the way of growth is something we've always looked at from an investment standpoint. But when we think about that type of deal, that gives us a specific type of tenant. We do not have tenants that take up hundreds of thousands of square feet. That's not the person we're going after. That's not our typical renter in these spaces.
Sure. What we found is that 100,000 square foot space, may rent for $6 a square foot. And it seems like every time you cut it up, it adds $2. So you take from 100 to 50,000, now it's $8 a square foot. So eventually, if you've got this bowling alley building with, 2 to 10,000 square foot suites, you're looking at double digits as a square foot rental basis, because these tenants, the balloon wholesalers, the HVAC repairmen, the pet crematoriums, just to name some of our typical tenants, they don't look at it on a price per square foot basis. And a lot of times, they don't even have a leasing broker who would look at it on that basis. They just look at, here are my sales, here's what I can pay in rent, that matches up, okay, done. I'll sign a lease.
Yeah. We go into investments with those types of tenants in there in the higher rental revenues, and our goal is really to be able to make investment distributions. Right? This is a how do we create cash flow investment, not a how are we going to maximize total value, essentially.
That's right. And there's good cash flow with it, because we're buying it typically at low basis. Either we're buying a building someone bought a few years ago and they raise rents a little bit, and then we come in with an offer that's very attractive to us, but they still make a good return, but low enough basis, and with rents jumping up so much that once we go in there and either mark rents to market or bring in new tenants, you've got good cash flow coming off of it.
Yeah, especially if we're taking a building that is not divided and dividing it up.
That's right.
And taking it from, we're buying something that's in place $6 or $7 rents, and then once we get done with our work, market is 12, 13, 14, we're seeing some pretty significant gains right away.
Right, which you get into those smaller, more local mom and pop tenants for sure, which seem to be the more budding part of the industrial energy industry. And you hear about Amazon expanding and all these big companies and their giant boxes, but I feel like the small business is really where the growth in industrial, definitely the rent growth on the smaller end is coming from.
Cool. All right, well, hope that's helpful. That's a little insight into our industrial deals with Nathan here, and we should have a bunch more of these coming out in the near future. Thanks. For more tips on operating and investing in real estate, please check us out at greenleafmanagement.com or find us on YouTube and Spotify.